Hello guys, hope I am on time today. It's 11:02. So today we try just to see the stock market correction. Hello, Trump D. How are you? How are you? Good, Trump. Good. Thank you very much. Thank you. Good night. So, in this session, we try just to have a discussion about this correction. I have been making videos all the week. Did you just wake up? Yes, yes. I always have a nap, okay? Because if I stay the whole day, I will be sleepy and I can't work. I can't talk anymore. So that's why I take a nap always before coming here. Hello, Artkov. As you can see, the market last week was so good, and there is a reverse, and I have been following the market. It means just the Dow, because most of the people watch the Dow as an indicator of the whole market, because the Dow has the biggest companies in different sectors. Okay, since it has many sectors in this Dow, it represents the whole market. And whether it is 30 stocks like blue chips, or it is the S&P 500, it means 500 stocks is the same. Because when you go to see what they do, you find generally they do the same. Hello, Cristiano Fan Vivo. Hello, Javad Iqbal. So Cristiano said, I bought your course a couple months ago. Now I am killing the stock market. It's very good that the market doesn't kill you and you kill the market. Is very good. Okay, since you are making money, this is the most important thing that someone can do in this market. Understand, when the market stops going down, and I told you there are two ways: either the market go up or the market go down. This is always my idea about the market. So that's why you see that I don't predict. Although I can be positive or negative about something, okay, when I want to buy, but I don't think that the future is a prediction. It's not. It is what we call speculation. Speculation is when you have a fact about the market or about the price, and you can make money from this fact. This is called speculation. Now, there is another thing, which is price signals. This checks the feeling of the people in the market. So when we got the signal and we buy by the signal, this is just the feeling of the traders in the stock market. Okay? It gives you all the feeling in one price. Since the market has been going up for 1 week, the market is strong. What does it mean? It means Trump said, what is it? He said, Karim, is Cristiano your son? No, man, he is not my son. Oh, no. My son is not in the stock market. No, he's not. And his name, Cristiano Van Vivo, it's not my name or my family name or something like that. Okay. So, wise man, how are you? Wise man, how are you? Trump said, when the market gives the signal that the correction is going to happen. Yes. When the market begins to fall down, this is the signal. Okay? When it stops, I showed you in last week and in many videos that I do on YouTube how I give you the confirmation that the market has stopped for real, but we will never know. That's why always we have this kind of future that it is coming that we don't know. So for me, I will never be 100% sure that the market will change or not, because I am not the market. For me, I just watch what the market does and I do whatever I think the market will be doing in the future. Okay? So if I don't get information, how can I have an idea about the market? So the market should give me information first, and then I decide what to do. Okay, when the market begins to go down, I shorted the whole market. Okay? I shorted because I see it going down. But when I have the confirmation that the market is no more going down, I cover my short. It means I sold everything and I go long. That's why I begin to do these videos daily and I say the market is strong, going up. Okay? So you see how I change according to what the market gives me. I don't change for myself. It means I say, oh, tomorrow will be down, so I will short from today. No, I will not do that until I get some confirmations. Trump D question, you were right. Thank you very much, Trump. But understand that I'm just try to give you my idea about the market. What I have today, I make decision for today and what will happen in the future. But the future, I don't know if my conviction will be right, yes or no. Do you, for example, hello, Empty Sky, how are you? Hello, JJ, how are you? Do you remember the other week when I bought a Twitter? Okay, the market was going down. Why should I go and buy Twitter? Okay? It's just a conviction for me that Twitter is a good buy at that time, although the whole market is going down. Okay? So the people who take actions on the right time, they can make money in the stock market. If you don't take action, if you wait for to see the trend, if you wait too long, you will be always too late. That's why my strategy is based on daily signal. If I see a signal, I see a stock that has my criteria and the chart is good, I buy. Whatever is the market, I buy. I don't care about the market. Because stocks, not all the stocks follow the market. Twitter, for example, was going down these 2 weeks or 3 weeks. It was going up. But the market was going down. Oh, the whole market was going down. So you see the difference? You see the difference? So you should follow stocks, not the whole market. Okay? In order to get daily signals, in order to buy some stocks. Trump said, which do you prefer in terms of shorting? ETF or stock or big stocks? No, for me, I short the whole market. I don't short stocks because there is a problem. If the stock has a gap up, you will end up losing a lot of money from this gap up. You are shorting, you think that the market is going down for this stock, and then after a few days there are news or there is something good in the company and there is a gap up. The stock goes up against you, so you will be having a lot of trouble covering back your short. That's why I sell short daily if I want, but I don't do it with a stock. I can do it with an ETF. So JJ said, can you put call option on DIA since it starts going up? Yes, you can, but understand that if the ETF, it means if the Dow goes back down, you will be losing money. So it depends on your conviction. It depends on your where did you buy the options. Okay. So I'm not telling you, oh, just because the market is going up, just go and buy call options. Because if you buy call options, you should buy first on time. If you are late, let's say next week the Dow goes down 1 day or 2 or 3, just an example. So if you buy your call options, will be losing a lot of money. Okay, so for me it's better to buy on time. When you see my criteria, for example, either buying long with calls or buying down, it means buy puts, you should buy on time. Okay, let's say the market has been going down. If you have bought some puts at the time, you don't wait until all the people see, and then you come and you it means this is the bad thing about your perception about the price. If all the people see it, you are not going to make as much money as the first guys who see it. So that's why I have my criteria. My criteria helps you to find something at the beginning, the first day, not after 10 days or 20 days, and you see the trend, which is so long, you like it and you want to be in it, but you have not been at the beginning of the trend. Okay, so our mission, it means our job is to find the stocks at the beginning, the first day. Okay, the first days of the trend, not at the end of the trend, because everybody see it, and the media, they talk about it. Okay, because the media, they like to see something in the market and they talk. Okay, they just talk because they see it in the market. But at the beginning, no one talks. When the stock is going up the first days, no one talks about it. Okay, because this is the secret of stock market. It means either you should be with the first, don't be with the last people to buy. This is just my idea about options or about stocks or whatever. You should be from the beginning. Nas Dilanochi, how are you? Another question with Trump. In February 8, I saw a lot of buying of Twitter. Is Twitter going to bring Facebook down? No. Twitter is so weak. Twitter is not as big as Facebook. Facebook is very strong and it has a big market of ads, and all the people are using it right now against Google. So if you want to compare, don't compare Twitter with Facebook. Compare Facebook with Google, for example. Okay? Because they are big and they make a lot of money, and this is, you can compare, because Facebook is a competitor to Google in terms of ads, the business ads. So Facebook is taking over Google, and this is something very important to see. As you can see, the price right now, Facebook is doing so good. Javid Iqbal said, what about using market neutral strategies with options under current conditions? I don't know what you are saying, Iqbal. You are giving me hundreds of strategies in one sentence. I don't know what you mean. Do whatever. What is this neutral strategies? What do you mean by neutral strategies? I don't understand. With options under current conditions, I have no idea what you are talking about. If you explain what do you mean by neutral strategies, I will try to answer you. Prince Singh, how are you, Prince? You come on time. Good morning. So Trump said, what do you know about the resistance technique of trading an IPO? Oh, Trump, I use the same techniques for everything. And we have talked about how to search for IPO, and from my stock screener, we have done this research before, and I showed my guys, subscribers, either silver subscribers or golden subscribers. I showed them how to find IPOs. Okay, and this is just when you search, you find them. But there is another search. It gives you only the IPOs. It doesn't give you all the other stocks for 10 years or 20 years or 30 years. So if you are interested, just take a look at my search. Let's say either you can order the training level 2, or you can check my subscription and you subscribe for 1 month or 2 and you see for yourself. If you have questions, you ask me questions, I will answer you. So there, I showed them how to find this IPOs for 3 months or 6 months or 1 year or 2. It means the new companies in the market. Okay? It's the same, they are the same. It means I use the same technique. But I have some technique to filter only the IPOs. If you are interested only in the IPOs, you can search with my criteria, searching for IPOs only. Some IPOs are doing good, some IPOs are doing bad. So it's not always IPOs are doing good. Okay? JJ say, I am waiting it to cross the resistance line. Okay, JJ, if the Dow doesn't cross the resistance line, what you should do after 2 months or 6 months or 1 year? What you should do? Are you going to stay doing nothing? Because the Dow is only 30 stocks. In the market, there are thousands of stocks. So why you stop yourself from trading because of the index? There are some stocks that are going up now. They don't wait for you until the Dow is good. So if you want to make money, don't wait for no man. Stocks wait for no man. It means when they are going up, they have a day, they begin to go up. If you are not there, you miss the opportunity. Now, how we do that is just by search. You search daily, you find stocks. This is what I do since 2010. I search daily. If I want to buy, I search. If all my money is in the market, I don't have money to buy, I just watch. I don't search. Because if I search, I find stocks, it will be bad for me because I don't want to see good stocks, and I don't have money. So another question, Empty Sky say, how to control fear in volatile market? Now, in volatile market, if you don't want to trade, stop trading. This is my opinion. If you get scared, stop trading. There are some stocks that are not volatile, that are slow. So try to find these kind of stocks. Don't go to a stock that goes $3 or $4 a day and you want to put stop loss with $1. This doesn't work and you will exit always. Okay? And you see a stock, for example, that goes $2 or $3 a day, up or down, and you can't do the risk because $2 or $3, it could be 10% or 20% or 50%, and you don't want to lose 10% or 20% if the stock goes down. So what is the solution for you is to search for stocks that are slow, not volatile. There are hundreds or thousands in the market. So if you fear the market, either go to these kind of stocks, okay, or don't trade at all if you are scared. I am going overseas for my wedding for 2 weeks. Oh, congratulations, man! Congratulations. What should I do with my positions? Should I leave my stop loss or just exit them till I come back and start again? Now this is a tough question. It's all about you. Okay, I don't know, but if you go to another country, there should be internet, or are you going to the jungle? Okay, JJ, where are you going? Which country are you going? There is no internet there. It means if you have internet, you can log in and change your stop loss or whatever you want to do. If you have long positions, it means you are investing. You are not doing swing trading. You can just put stop loss and leave them. Because if they go to the stop loss, they exit. If not, they will continue going up. Trump said, if the SPY rises 45 degrees, is good signal that the correction is coming. No, I don't see. I don't see with the what is this degrees that you use? There is no degrees. I told you, Trump, that for the SPY, which is S&P 500 ETF, or I will show you, Trump, I will show you with the SPY. At least you will you get an answer. So this is the Dow. Let's take the ETF, which is a SPY, which is S&P 500 ETF. Okay, so is it the resistance line? 286.63. This is the yes, this is the resistance line. This is here the support line in red. Now, if S&P 500 ETF, it goes above the resistance line here, this correction will be over. You see? So, the correction is going down, it stops, then it goes up. It's here right now. But if it crosses, this trend will continue. let's see here. The trend will continue going up. And the trend continues. So this is how you see things. There is no degrees that I see here. For me, just the price goes here. Whatever is the degree, I don't care. Okay? The market is going up, crosses, the trend will continue. That's it. Hope you understand this simple thing that I put. Okay? So Trump, as I showed you, that is the thing. Javid Iqbal said, buying deep in the money puts and at the market calls to be safe on both sides, whether the market goes up. Yes, Javid. Why you should go to the opposite sides? How can you go up and you go down at the same time? If you don't want to be in the market, be out of the market. The market has only one direction. Okay? Either up or down. There is no up and down. There is no you be in the market. So I will Iqbal. This is very interesting. I will tell you because I see. Where is Iqbal? Yes, Javid. I will explain to you by a simple thing. Okay, let's get the thing here to explain. Okay, Iqbal. Let's say here is going up, going down. So you buy calls and you buy puts. What is this play that you are doing? What is this strategy that you are doing? If you buy calls and you buy puts, most of the time you lose little money, but you are not doing nothing. What if the market is going up? Okay? So all these puts will be going to be zero, and here you will be making some money, but minus this money plus this money, it becomes zero. So you are in the zero always, or you can lose commission and you go down. So this is not a strategy that you should rely on. I'm telling you what I did to understand this. Okay? Where the market was up, I buy. The market is down, I sell short. Or I buy, for example, puts. Here you buy calls. The market stops, go up, you buy calls. This is how you make money. Okay? You buy calls, the market is going up, you buy calls or buy stocks. If the market is going down, you sell short or you buy puts. This is how you make money from the market. If you want to play other side, to be against the market, for example, the market is going up and you want to short it, you are the loser. A loser. You will be the loser, the biggest loser in the market. Okay? So stop doing this kind of strategies that I don't know from where do you get it. Okay? So Iqbal, this is my my idea or my opinion. Don't outsmart the market. Don't play the fool. Okay? The market is going up and you are going down. Well, what's this strategy? And you buy up and you buy down. Okay? This will not work. And if someone tells you that it works, that guy is a loser also. Because he's teaching you something that makes you lose money on the long run. So try to be cautious about this. The market is always doing one direction. Okay? This is the trend. The trend is going for long. Okay? I'm showing you, for example, let's say the SPY, which is 500, S&P 500. See, it has been going up from 7/11/2016. It means 1 year and nearly 3 months going up. How can you go down and you buy puts? Okay? As I showed you here, you can't be down and up at the same time. You can't. You think that you outsmart the market, but the market will crush you and you will make no money. So please, he said, what did he say? Trump said you drink too much coffee is not good for you. Oh yeah. No, it's good for me. It's not good for you. You are talking about yourself because you don't know me. Okay? If I don't drink coffee right now, I might be sleeping and you are watching me sleeping. That's it. What you should do. I have been drinking coffee when I was little, like when I was like 5 years or 2 years or 3 years. So it's part of the blood I have. Okay, let's continue. JJ say he needs the coffee to stay up for us, which is good. Yes, thank you very much. I told you I was sleeping. I have a nap. So if I don't have this sleep or this nap, I can't stay long. Okay. Now, Trump said, "What kind of stocks that day professional traders follow?" Now, there are thousands of stocks. Why you ask me, Trump? You ask me which stocks. Okay? I bought Twitter before, but I bought penny stocks. I have a lot of stocks in my portfolio. There are a lot of stocks I am in. And even before the market collapse, it means the correction, I have some stocks that I exit, and I bought other stocks that are good right now. So it depends only where you are in the market. I have given you a clear example. I got a gap up for Twitter. I bought it a long time ago. It's going up. The market was going down, but Twitter was going up. So what should I do? I bought Twitter and I made money from it. You see that? You see? So you should need only to search. There are thousands and thousands of stocks you search from daily, and you will find bargain. You will find good stocks according to my criteria to buy. Now, it doesn't mean that any stock you buy, it goes up. This is impossible for any strategy. But any stock that goes up, you keep it, you follow it with a stop loss, and then you can make a lot of money from it. So this is how it works. So you should search, because each day, I will give you here an example. An example how what I do. So I will just give you Okay, let's say today is Saturday, 2nd, 17. Okay, there is a stock here. It goes up according to our strategy. Now, if you see another stock that was up here on, let's say, 1/16 in January, it has the trend like this. This stock has just begun. This stock is already a trend. It has a trend. It's all the people will see it. Okay? Now, in the future, each day you will find stocks like this that they go up. Okay? Let's say 217. Here is 220. Here is 221. 222. Okay? 222 I think is so today is 17, 18, 19, 20, 21, 23. Okay, this is Friday. So in each day you find stocks to go up and you find stocks that go down in each day. Okay? So this is the market, how the market works. It's always like this since 50 in Europe, in 1950, when we have two stocks in Amsterdam, two stocks in Europe, in Amsterdam. It's always the same. Each day we have stocks that go up, stocks that go down. Here also, up, down. So you choose what you like. If you like to go to short, you should use these stocks. If you want to go long, you should find these stocks and buy them. Okay? And each day we have a momentum of a stock. Okay? We have a momentum. Each day we have momentum. You should buy on this day because this is the first day. Now, this stock, for example, in January 16, it has been, the first day has been in the 16. Now we are in 20, for example. You see the trend. The trend is already seen and everybody see it. Okay? So this is just an example of how things work. There is internet but slow. Okay. Oh, for you guys, there is internet, but if you can just enter and check, if you put stop loss, if you can see which time the internet is strong, and just to change your stop loss, okay, that will be a good idea. But if you want to exit and come back, I don't know. It depends on the stocks you are in. Do they stop going up or going down? They wait for you? This I don't know. And the stocks, they wait for no man. Either you buy them that are good, they continue to go up, you will be making more money, or you can if you are not going to that much time, like for 1 week or two, you can just put stop loss and leave them. Any stock that goes down, hits your stop loss, you exit it, but you should use the GTC, good to cancel. This good to cancel, the stop loss stays for I think 2 months, at least. You make sure that each day the stop loss is there, because sometimes if you forgot, there should be no stop loss. Mr. Handa said, oh, let's JJ said, let's see here, we begin from the beginning. Trump said, Kareem, the SPY could pass the resistance and crash possible. The market is tricky. Yes, you are right. Here, Trump, you begin to understand my strategies. Okay? Nothing for sure. There is nothing sure in the market. The market is going up. The correction is nearly over, but you will never know. And this is why the market, you should never have convictions and you think that the market will do your convictions. The market is the outcome of all traders, investors, and what they do. Okay? So, you should respect that. You should always respect the market, what it does. What it does is always right. Okay? Don't fight the direction or the price of a stock. Don't fight it. Okay? If it's going down, you'll begin to lose money. Either you should exit. If you are investing for the long run, maybe you stay because you are an investor. You are not a trader. You see always the difference. Okay? Now, Tubal Kane, salam from Riyadh. How are you, Tubal? How are you? I haven't seen you for many times. JJ say, I see you had a new cut. Yes, I always have new cut. I don't like to have the 70s. You see the 70s, I don't know, the big head, you know, the big hair. So I don't do that anymore. It wasn't the 70s, in the 80s where the people have. It was the fashion at that time. Trump said, how do you use trailing stops? I told you before, I don't use trailing stops. I will show you why. Okay? I will show you why before I continue with other guys. So, check this. Now, let's say a stock is here and you bought it at this price. Let's say you bought it at $24 and your stop loss is $23. Now, if you put a trailing stop at 23, it means we have $1 stop loss. Now, let's say the stop goes to 25. Your trailing stop goes to 24. Okay? Let's say the stock here was volatile. Okay? And it hits your stop loss and it goes up. Now it is 26. Now here, the question is, are you still in or are you out? You are out. Because your trailing stop has changed it to 24 and the stock has gone to, from 26 it goes to 22.90. Oh no, 23.90 for example. So it hits your stop loss and the stock continue to go up in the morning. So here you exit. For me, trailing stops, I don't use them. I have other ways. I don't use them. I have never used them. I have never used them. This is trailing stops. Never. Because they are against my strategy. They are against. I have other ways to do the stop loss. Now this, you find them in training level 6. How to calculate the stop loss. Or you go to training level 7. How to follow the trend. It means how you change the stop loss from one price to another price, and what is the criteria. Because I use some criteria to know where to put it. So this is not just subjective. It's not subjective what I do. It is objective. It means I have rules. Okay? It is objective. I have rules. I have rules to follow always. Rules. So this is how I work. Okay? So always think that what I am doing is not subjective. That's why I teach my strategies, because they are objective. It means based on criteria that you should follow and apply. Okay? It's not just you put trailing stops and then you can make money. You can't make money with trailing stops, because if you are in a stock that it is volatile, most of the time you exit, and then you exit and the stock continues to go up, and then you just lose a lot of money. Okay, it's just you don't do good in following the stock. It means your techniques are bad. You can't make money with your techniques, so you should change your techniques to better techniques that can be better. Okay? Now another question about Javid Iqbal. Is it by Chuck Hughes' neutral market strategy to making either way? Man, I explained to you with an objective way that you can't make money being in both directions. Okay? You can't make money. Why you go to both directions? Do you outsmart the market? It means you will know more than the market, and you will be up and down. And I'm telling you this thing, that your strategies or this guy's strategies doesn't work. Why you should be into the directions? If now the market is going up, why you are going down? This is stupid. This is stupid, and you are following stupid strategies that will make you no money. If you can make money, okay, go with it. But don't ask me that it is a strategy. It is not a strategy for me. Okay? It's not a strategy because you are not going to make any money. You can't outsmart the market. It means don't be in two directions on the same stock. Stock is going up, and you buy puts, thinking that the stock will go down. This is a stupid thing to do, because the options, calls and puts, they are not. See, because a lot of people, they don't understand this. So let's say here, this is the stock here, $20. Let's say if it go to 21, or it go down to 19. Okay, so here we have $1, $1. Okay, now for the options, let's say the option is $1 here, okay, and it's going up, you are making money. But if you put another $1 here, which is going down, this is the price, this will not be the same as $1. The calculations of options, it's difficult, it's not easy. It's not you. It's not the traders who calculate these options. It is a software. And they make sure that you always lose money. Okay? If you are wrong. So when you are wrong here, the market is going up, you are wrong, you are not just losing $1 like here. You may lose $1.10. So don't think that calls are the same as options, as puts. So call and put, they are different. In calculations, they are not the same. Going up, going down. So don't play both ways. If I tell you, are you going to New York, which is in the New York, or are you going to Florida? You tell me Florida in the south. You tell me I'm going both. I'm going to New York or going to Florida. This doesn't work. Either you go to New York and you go north, or you go to Florida and you go south, if you are in the middle here. So understand that this strategy that you are using is worthless. Worthless. You are not going to make any money from it. Okay? So we have, I have explained too much about these options. So Javid Iqbal, try to see if you can make money, go ahead and use it. But you will see by yourself that you will be losing money. Even if it is the same day, you buy a call and you buy a put option, you will be losing money. Okay? You will be losing money. You say to me, how? It's just because the calculations are different. It's not like a stock. A stock, if it goes $1 up or it goes $1 down, it is the same. But in options, it's not the same. It's Wall Street product. Okay? And Wall Street, they make sure you are not getting that much from their product. Okay? So understand that. Let's see another question. Mr. Handba say, I bought APPS this past week. Okay, we are not going to speak about stocks, and because the people here, they don't know, maybe they think it's good or it's bad, and they buy it and they lose money, and they say, oh, we see it here, and they say buy it. We don't see that. Prince Singh say the coffee company running only by Karim sir and generating review. The coffee company, yes. I hope I will buy coffee from South America or from Africa and sell it here. I will be a big businessman. Yes, it's very good. It's very good to do business. Maybe in the future. Okay, maybe. There is one, they say, in Canada, one immigrant, now he is one of the biggest importer of coffee in Canada. He just got the idea to buy coffee from the countries they sell, and he go to them and he bought and he brings to America, which is very good. Jamiz, how are you, Jamiz? He said, the market will drop, man. Everything is artificial right now. Oh yeah, artificial. Artificial. It means from this past week, people are making money. It's artificial. We like this artificial thing. See, don't have an idea. The market can go down, yes. But when you are convicted, it means you are convinced that it is true. Here you are wrong. The market can continue going up, as I told you, to hit the resistance line and the trend continue. Okay? It can be like that, or it can go down. But for me, I don't predict anything. So if you are following me, don't predict also. You will be good in making money, because making money is to take the opportunity and to do something. When you get the information, how can you act without any information? You see the stock is going up, or the Dow is going up, and you say, oh no, it will go down. It can go down for 1 day or two, yes, but it might continue to go up, okay, to continue the trend. So don't have conviction. It means you are convinced that the stock will go down, and artificial. Everything is artificial. The value of any share of a stock is artificial. Who moves it? It's the people. If all the people will buy, this artificial share will go up. If the people sell, it will go down. That's it. Okay? So everything is artificial in the market. How many stocks should professional trader watch? For me, I don't watch. I search. If I need to buy, I find I buy the same day, and I put stop loss. That's it. You can put some stocks that you like, and you follow my criteria, and you buy them on time. Yes. This is training level 3. How to buy stocks using an industry index. It means you can have a list of stocks that you like. You know them a lot. You have traded them a lot. You put them in the list, and you put my my criteria on them. And then, if one day the stock is good, you buy it on momentum. This is a good thing you can do also. But if you are speaking about how many stocks you should professional watch, depends on you. If you can watch 5 stocks, it's okay. If you can watch 10 stocks a day, it means at the end of the day, and you see if there is one which is good, it's okay. So all this depends on how much money you have. If you have 10,000, you can't watch the whole market and you have only $10,000. What do you do with watching all the 50 stocks or 100 stocks? You are just wasting your time. Just wasting your time. Because if you can buy 1 or 2 or 3 stocks, that's it. Why you watch 100 stocks? It will be a very big job for you, and you just waste your time. Okay? Another question from Javid Iqbal. What do you think about using options instead of buying stocks to save the cost of the trade? Yes, you can do that, but understand, I will show you here, Iqbal, what's the difference between buying options and okay, so let's just explain. Okay, I just explain to give you an idea. So here is buying stocks. Here is, for example, buying options. Options. Okay, let's say you buy one contract with $100, and this is, you buy one contract and it is $100. But if you want to buy the stock, just an example, okay, I just give you an example, you should put $3,000 to buy this stock. Okay? Now, if you are making money, if this stock, $3,000, in the future, let's say it goes to $3,000, $500, $3,500, it means it's going up, the stock is going up. Let's say the stock is $30. Okay? And it's going up. So here you are risking, your risk is the whole $100. Now if the market is going up, you begin to make money as a percentage. Let's say from 100, okay, 100, it goes, let's say, to $300. So you are making 200% of your money. Okay? You are making 200% here. Now, if the market is going down, you can, for example, this becomes worthless and you lose all your money and you lose 100% of your money. This is what I am talking about. 100% loss. In a stock here, you should never see 100%. You should, for example, let's say you lost, let's say you lost 5%. But here in the option, you lose 100% if this contract is worthless after 1 month or 2 months. So you see the difference? So here, if you buy the whole stock and you put 5%, okay, 5%, you lose only this 5% with a stop loss. Okay? But here, you can, if you leave it and after 1 month or 2 or 3, you can lose 100%. That's why, which is more riskier? It's options. Options is more riskier. That's why you can, with 100, you can control $3,000. Now, why Wall Street guys give you just to buy 3,000, you buy it with 100? Are they stupid? So I will ask you this question. Are Wall Street guys, just to understand, are Wall Street guys stupid? Now you ask the question why. Okay? Are they stupid? Something is worth $3,000. They give it to you for $100. Are they stupid to do that? No, they are not stupid. Because you are risking all $100. But understand that you are not going to buy $100. Okay? Let's say you buy $1,000. Okay? Let's say you buy $10,000. And if you have bigger account, you can buy $50,000. Don't tell me why the people they buy 50,000, because they have big accounts. It's not like you have small account. So if you buy $50,000 or $10,000 or $1,000 and the market is against you, there is a gap down, there is a problem in the market, what will happen to this money? It's gone. It is gone. Zero. It is gone. Your money is gone. That's why Wall Street, they are not stupid. They know how things work. And they make options because they can make money from you. And when you lose everything. That's why I told you, options is riskier. It is risky. It's not for the beginners. You think it is easy, just you put $100. But this, you can't make money. Let's say you put $100 and you get $150 after 1 week or two. They tell you, oh, you have made 50% of your money. But your money is small. It's just only $100. Now, if you put 1,000, they say, oh, you have made $1,500. It means you have made 50% of your money. But if we have a gap down, all this money will go and you will have zero. What does it mean? You lost 100%. That is the game of options. Hope you understand. You understand this game. Okay? So it's not easy as you might think. That's why people, they lose money. It's just because you don't know your risk. You think that Wall Street guys, when they created options in the past, okay, they're just playing, giving you advantage, giving you to make money out of the market with little money. Okay? So understand that it is not the case. And you are just Mr. Handa said, I thought we were here to share so we can all learn together. Oh no, Mr. Handa, here we don't share stocks. I don't give you stocks. I'm trying to explain to you how my strategies work, and then you can buy whatever stocks you like. But if you give them, if you put a stock here, okay? Now, some people think that I said to them buy. I didn't say buy to them buy. So you are sharing something that it is private, that doesn't help us. Doesn't help us make money. That's why tips, I don't give tips in my videos or in my training. I don't give tips. I give strategy that works. Okay? So this is the difference. Now, if you go to another live stream, another guy, and he give you stocks to buy, or this is a stock picks. This has nothing to do. There is no education there. So understand, Mr. Handa, that we are not sharing stocks here. Okay? We are not sharing stocks. Oh, because Bikes Night, how are you? I haven't seen you for a long time, a long time. You say because Wall Street guys, they love us. Yes, they love us. That's very good. Trump said, you teaching English. I'm teaching strategies in trading, not English. Trump said, what about the gap up? Yes, you can make money, but because option, you have small money. It's so, Trump, check this thing about option. Okay. Let's say you buy a call, one call contract option, and you have $100. Now let's say here we have a gap up. Let's say here it goes to $200. Now how much money you make? You make 100%. Okay? Let's say we have a gap down. Here, $100 it becomes zero. So what is your risk here? Your risk is 100%. You are doing trading by risking 100%. And in order to make money, a good money, you should raise this to $1,000. Now, if you make money, let's say you make $2,000, which is excellent, you double your money, but understand the risk. If you put 1,000, the market gap down, so you are losing 100%. It means you are losing all your money that you put in this call. Are you going to bet on $1,000 each time in options? So you are risking always 100% of your money. And this is bad. You should be advanced student, advanced in options in order to make money. If you are just a beginner, it's always very difficult to make money from options. So this is what I say. Try always to speak about the risk. Don't speak about the profit, because the profit you will never know where the stock go in order to make your money. But the problem is that risk is the most important thing. That's why here is the thing. Now, if you have a stock, you can stop, okay? You can lose, for example, 5% or 10% or whatever percent you like, so you control the risk. Control risk better in stocks. Now, in options, the risk is always 100%. You are always risking almost all your money. So the risk is high. That's why Wall Street created options. They created options. Options doesn't exist, but they created options product in order to make high risk for the traders. Now, if you don't know how to trade, they will take all your money because you risk 100%. Because you give premium to the holders of these shares. Okay? So, Trump said, what the most important thing in technical analysis is the price. The price is the most important thing you should follow. And my training is all based on criteria on the price. But I don't use indicators and moving averages, although they are based on price also, but they are strategies. For me, I don't use other people's strategies. That's why I don't use indicators. Because indicators, each indicator, it is a strategy of a trader that he published before. Whatever strategy that you find, it was published because this is what the people like. They know Wall Street, they know that the people like new things. So each year, they come up with a strategy, they publish it, they make millions of dollars from it, and then you try it. It doesn't work. Next year, they make another strategy, it doesn't work. And they make millions of dollars from selling books. And the next year, they give you another strategy, it doesn't work. And then they make millions of dollars. This is how it works. But the people, they understand it doesn't work, but they try because it is new. And this is a psychological thing about the market. The market is moving because the people are dreaming. Okay? They are dreaming to have a strategy that it is 100% sure and they can make money automatically, like the trading software. if the trading software, for example, if it makes money, no one will sell it. Why he should sell it for you for $300 or $1,000, or he rent it to you? If it makes money by itself, he will never sell it to you, because it's automatic thing. He will just sleep and the strategy makes money. So that's the thing. Trump said, how do you combine volume and price when trading? I don't use volume. So Trump, I will make it clear for you. Don't ask me again. Okay? Don't ask me again. No volume. I don't use it. No indicators. Indicators, let's say MACD or another thing. No moving average, which is called MA. Okay? No volume. I don't use volume. If it is 10 million or it is 100K or whatever it is, I don't use it. Don't use it. No indicators, no moving averages. Okay? So this is just to make it clear for you guys, not to ask me again the same question. I don't use them. Okay? Now, I say SPY and Apple or big companies only gap down in earnings. No, it's not only Apple that gap down. Let's see Apple, because let's go to the chart. We see Apple. Where is the gap down? There is no gap down. There is here a gap up, yes. There is here a gap down, small gap down here. There is a gap up here. A gap down here. But all these, there is no. Here, there is no. This February, there is no. But in... gap up, gap down, it's totally different. Okay? So, the SPY, which is S&P 500 ETF, it has 500 stocks. If there are a lot of gap ups, it will show in the average. Javid Iqbal say, how about if a stock gaps down during the night significantly when the stop loss would not work at night when market is closed, and how to handle it next day? Okay, let's explain this for Javid. Javid, let's explain this. Which is, okay. Now, let's say we have a stock XYZ. Now, today is, let's say today is 16, which is Friday. This is Friday, last Friday. Now, 16, 17, 18, 19. Now, 219, okay? 219, which is a Monday. Here, at 4 p.m., there is earning news. Earning news, it means the company showed the earning here. At 5 p.m., they announce. Now, what about Tuesday? Tuesday, which is 2/20, either we have either we have a gap up or we have a gap down. Stop loss doesn't work. So what you should do, you should either, we have only two things, stay or sell before 4. Okay? Your solution, either to stay and to have the risk, or sell and you have no risk. So this is up to you. What if the stock, it happened to me one time, I bought it at $78, and the next morning it is $135. Are you going to stay, yes or no? Here you say yes. Okay? But I took the risk of losing money, of losing too much. It can be going down to, let's say, to $60. $60. I can lose a lot of money, but I stayed to have the risk. So it all depends on you. Are you with the risk? Yes or no? But understand, it's not only earning news. Sometimes it is national news, national news, or international news. And sometimes you have a gap up or gap down. So the thing is, the market is always volatile after the market close. So if you don't like this risk, do day trading. Do only day trading. Don't do swing trading and don't invest. This is my opinion. Okay? So this is for Javid Iqbal. The stop loss doesn't work. Okay? It doesn't work. It works only from 9:30 to 4 o'clock. Because if you put it, if you put stop loss after the market close, you will exit. Whatever you put, you will exit. Okay? So there is no need to go and put it, because you will exit the trade. And you will exit badly. You will exit badly because the market can go down to 0. Okay? Sometimes some stocks with low volume, like penny stocks, after the market, they become 0. Here I explain to you. Some of you guys don't know, but I will explain to you. Okay? Let's say this is 4 p.m. Now, before 4 p.m., a stock which is called XYZ, the bid is $1 and the ask is $1.01. It means $1.01. Now, after the market close, you will find that it is 0, 0. Now, what does it mean? 0 bid, 0 ask after 4. It means no buyers, no sellers. You can't buy, you can't sell. No buyers and no sellers. It happens sometimes in some stocks. Now, I give you another example. Let's say the stock is $27. Here is $27.01. Now, what the market maker do is the bid 27, it becomes $10, and the ask is $45. Now, if 27 becomes $24, you can't buy. You can't buy the stock because it showed that it is 45. If you want to sell, the stock is chose $10 as a bid. So you can't sell because your stock is $27 before 4. You can't sell it for $10. Now, if the news comes here, you can't do nothing except when you have a good broker that stays until 8 p.m. 8 p.m. and then if you see if there is good volume, you can buy or you can sell. So understand that it is very difficult after the market close, and it is very risky also. It's very risky because if you go and buy by $10, you are losing all your money. And in the morning, next day in the morning, it starts at $28. So you sell at $10 and tomorrow it's $28. So you are losing all your money. So if you are a beginner, stop thinking to see after 4 o'clock because it's always risky. What the numbers that you see are very risky, and you don't know what's going on here until the morning it comes. So as I told you, you should always either take the risk or sell your shares and be having no risk. And this is fair for you. If you are scared of the market, you should get out of the market. If you are okay to lose or to make money, you stay. For me, as my personal experience, I have never been scared of a gap up or gap down. Never in my life. I always trade whatever comes. Okay? Because I know what I can risk. But if you can't and you are scared of the market, you are afraid of the market, don't trade. Or do just day trading, which is very good for you. In the morning, you buy or you sell. Either you make money or don't make money. So you see the price, you are okay with it, you exit whenever you want to exit, you buy whatever you want, you put stop loss or you don't. It's up to you. But whenever you leave the stock after 4 p.m. for the night, it will be a big problem because there is a risk of losing money. Okay? So it's up to you what you want to do there is no one who will tell you what to do, stay or not stay, because no one knows. Okay? No one knows what will happen in the market. So either you take the risk or you don't take the risk. So Trump said, which mistakes beginners mostly make in trading? Yes, these mistakes I'm telling you. If you are scared of the market, this is a mistake. You should never be scared. If you are scared, don't trade. Okay? There are a lot of mistakes. We can just go. In training level, I think level 17, how to fix your trading problems, I stated 28 mistakes and their solutions. Sometimes you are doing a mistake and you don't know. So when you get the training, you should see the mistake and you should see the solution and you solve the problem before you continue doing the same thing. Trump said, what are the basics of day trading? It's always the price. Always is the price. There are techniques that you should learn to do day trading. These techniques you should learn and you should practice until you become proficient in them. And then you can begin making money because you have experience. Because it's not just to get the technique. When you get the technique and you don't practice it, you can't make it. Because trading is, you should experience what's going on. It is not just to watch. You should put some money to feel and to see what's going on. If you don't put money, you don't feel anything, so you can't learn anything. Trump said, do you support the idea of buying in the strength, sell on the weakness? I have no idea what does it mean. Sell on the weakness, buy on the strength. I don't know what does it mean. If you mean, if there is a trend, you buy, yes. If the trend is against you, you are losing money, you exit, yes. But how do you know this? How do you know the market is strong and the market is weak? This is the problem. There are techniques that you should know in order to know that. Wiseman said, Kareem, a person that has 300,000 to swing trade, should they have more positions than someone that the 50,000 to swing, or is that up to them? It's up. I will give you the rule. I will give you the rule. The more positions, the less risk in the market. The less positions, the more risk you do. But the more risk you do, you can make either a lot of money or you lose a lot of money. So it's a lot of stuff that it is interrelated. So the only way to know is to have techniques and the training to know how much you should risk in each trade. Especially if you are trading penny stocks, the risk is more. Why? Because penny stocks are moving fast. I will just show you why. Here, let's say, so let's say a penny stock is here, is $1. Okay, $1. Let's say in 1 week, this stock can go to $2. It means 100% advance. Now another stock, which is $200, in 1 week, let's say it goes to $220. Now you see that penny stocks, okay, are going fast. Bigger stocks, they go slow. They don't go like penny stocks. Now this is in general, okay? There are some stocks that go very good also in bigger stocks, but this is the general idea. Now this here are the common stocks that we see always, common stocks. Penny stocks, for example, it can go from $1 down to 5 cents in 1 week. Okay, it can. Here, $200, it can go also, let's say, to $80. Okay, it can go also. But common stocks are slow compared to penny stocks. So that's why penny stocks have special trading, that it is different from this kind of stock. They are different. That's why if you are doing penny stocks, bear in mind that they are fast. You can make a lot of money and you can lose a lot of money if you don't know how to trade them. Okay? So this is the idea that I want to tell you about the thing. Day traders should understand market depth. For me, Bike's Night, for me, the market depth is the price and the trend. That's it. This This is what I follow in my real trading. I don't follow other things like company fundamentals, competition, PE, balance sheet, all the other stuff that the investors are doing. I don't follow, okay, because it doesn't give that much to the stock. Hi, Rahmatullah, how are you? You come late today. Can we trade the same stocks over longing or shorting? Yes. Yes, you can. I'll give you an example. For example, if you can remember, like for example, Twitter. If I give you the example of Twitter, it starts like I think 42 or something. It goes in 2 months or a month. It goes in 74, I guess. In I think 3 months. And then from 74 it goes down to 13, I think 75 or something like that. So this is going long. This is going short. So stocks, they can go up, go down into trends. This is a trend up. This is a trend down. So you can do that with a lot of stocks as you like. Okay, so it's a very good idea either to go long or to short. But shorting, try not to short penny stocks overnight. I told you many times, there are a lot of people who lost all their money and they are in debt. It means they are in trouble because of shorting stocks without knowing the risk. Okay, so try always to be careful of these penny stocks. If you can short them in the day. Okay, daily. Let's say you find the stocks going down, you short it, because you can exit at any moment. Okay, you can exit, but at night, if someone is buying after the market close and you are shorting it, okay, I have given you this example many times, but for you guys, those who are new, I will show it to you again. Okay, let's say XYZ is a stock. It was $1.50. Okay, and after weeks, now it is $1. Now you see that the stock is going down. So what is the thing? You get the idea that the stock can continue to go down and you make money. So you short it here. You short this stock here, okay, at $1. The problem is after 4 p.m., what did happen? A stupid rich person, stupid rich. When I say stupid rich, it means any rich, he has money. He buys millions of shares after the market close. He wants to own this company. Let's say he wants to own 50% of the company. He likes the company. He wants to own it. So he go to the company and he gives them the offer that he will buy, let's say 5 million shares. Okay, 5 million shares. Now the stock in the morning goes to $10. because of the buying. Now, let's say you buy $1,000 and you short $1,000. So in the morning, you should pay $10,000 to your broker. 1,000 is yours, it is zero, and then you should give him $9,000, and you receive what we call a margin call in the morning, and he will give you 1 day or two to bring $9,000. This if you buy 1,000. Let's say you have 10,000 and you put it in the stock and you short it because you see someone telling you that if you short $10,000 and the stock goes to 50 cents, you can make $5,000 in a day. So you do what he asks you to do, and then you will be ruined because you will be in debt. And no one will help you because it's a big responsibility. That's why I told you, if you are new, try just to day trade. If you want to short, sell short in day trading only. When you get training, it means you understand what you are doing. Just day trade. It means sell short. Let's say the dollar was $1. It's going down. Let's say 0.85. You sell. You make some money. So make money. And then you are out of the market. You have no big risk. No big risk in the market. Only the risk that you see when the stock is going up or going down. Now let's say the stock is going up $1.15 or $1.10 and you can't make it, you sell it. It means you cover back and you exit the trade. You exit the trade. So you are safe. You lose some money, but you are safe. Okay? Now let's see some other questions. How to know healthy trend line? You should follow training level 7, Trump. This is how do you know. There are techniques that you should use to know. Okay? So I can't give you these techniques for free. Understand that, Trump, and I always tell you that there are some information that I can give for free. It's always something that I teach and something that people are following me for this in order to learn how to do it. Which tools do you use to measure pullbacks? I have no tools. I have criteria. That's why if you want to use indicators for the pullbacks, they are not effective because it's a strategy that you don't understand how it works. But for me, my criteria, I understand. It means when you use my criteria, you will know why you use it. This is the big difference about my strategies and other people's strategies. It means when you use my strategy, you will know why you use it. For what reason you use it. In order to follow the trend. But it's very difficult to use indicators to follow the trend. Okay, they use a lot. They show you a lot of things. But for me, I don't use what the other people are using. Wiseman said, if you have $50,000, I have 4 or 5 positions. Is good. Just was wondering if I was smart to do the same if you have way larger. No, this depends on your risk. So, Wiseman, your risk, it's not my risk. So we can't do the same. Okay? And it depends what you are trading. If you are trading penny stocks, you should make more positions. because penny stocks are very dangerous. If you put this big positions and you lose a lot, it will affect very bad your account. So it depends on you, on your risk and the stocks that you are doing. So two things: your risk is one thing, and the risk in stocks. Let's say penny stocks are not the same as common stocks. So when you are doing penny stocks, you should have more positions, more stocks, because they are very dangerous. Okay? So this is the two criteria that you should put. Now, another question. Empty Sky. In our stock exchange in India, when short stock, buy it same day, not next day. Oh, it means you are doing selling short the same day. Yes, it's okay. But here in America, you can short the whole year. It doesn't matter. Here in America, you can short whatever you want. But in India, if you do day trading, yes, you can do that also. How the Federal Reserve Board affect the market? I have no idea. I don't follow the news. I don't follow. For example, when I buy a stock, there is a earning date. What is this has a relation with federal thing? Okay, so stop getting information from the market, because you will be always confused. Okay, so anything can affect the market. The Fed, the international news, national news, company news, earning news, all the news can affect a stock or affect the market. But you will never know, because when it happens, the price has always changed. You will not know the news before they happen. This is what I am telling you. So stop making predictions about the market or what the Federal will do, and then you buy because they will do good or bad. So try to avoid this kind of thing, because you will learn nothing. You will learn nothing because the news, when it comes, the price has already changed. Because the people who put the news, they have already bought or sold. Okay? That's it. What I want to say about this. Trump D said, which sectors goes up in recession or during the market down? It can be any sector. So you should search these sectors and find which one. It's always about search. For example, many years ago, 2 years or 3 years ago, we have an energy sector that collapsed. Okay? But the other sectors are doing good. So if you know the sector was doing bad in 1 year or two because the gas was very cheap, it's going down, 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 down. It's just because the companies are losing money, so the oil was so cheap. So you should follow these things. How to follow? Either you can use training level 2 and to search for stocks, and you see which stocks are in which sector, and you get an idea. Or you can do it manually. You can go to sectors and see them. I will just show you, give you an idea. So I will just give you an idea. So let's say, I'll just give you an example. Now, this is the energy sector going down. Energy sector. energy sector. So if you find two stocks, most of the stocks are going down. Most of them are going down. Now you go to other sectors, all they are going up, but one is going up 50%, one is 100%, one is 10%. So the trends here, one is only 5%. It doesn't. So all these are sector 1, sector 2, sector 3, sector 4. So these sectors are going up. This sector is going down. So there are techniques where you know these are going up, these are going down. They're going for a long time. Let's say 1 year or 2 years. Now energy sector have been going down, I think, for 1 year and a half. 1 year and a half going down. So everybody knows about this. When the trend is going down from here, it's going down. And then what did happen to energy sector? They stopped going down, and then they have been going up. So all these stocks going down, they will be going up again. And people who know them, they can make money. And these stocks here, or this, they have been going up, they have been going down. And here, either you buy puts or you short, or so all your money, you should take it from all these and you put it here where those are going here. So all these changes, I teach them. I teach all. When it's going up, you can use training level 2 or training level 3. If you buy from the bottom, this is training level 13. So I teach all the things that happen in the market, so you should understand what's going on to the market in order to do them. Okay? So, how to know that breakouts are failed? When they don't continue into a trend. It's very simple. If they are fake, they go down. They don't continue up. As simple as that. But if you ask me, what are the techniques you can use? Okay. The techniques are used in training level 7 or level 2, which means you should see where the stock is going and if it failed, yes or no. There are techniques to use that. Can you include candle pattern in any strategy? Yes. I have techniques, not patterns. A pattern is when something is fixed. Okay? For me, it is not fixed. There are criteria that you should follow. First, in training level 2, how to search for stocks using stock screener, I give you only 2 criteria to generate some stocks. And then you go through them in the chart, one after them, and see if they are good charts, yes or no. So this is based on criteria, not on patterns. Because a pattern, if there is no pattern and the stock goes up, you will not find it. But my strategies, you will find all the stocks that go up, whatever is their pattern. Okay? So you will find that in my strategies. Radakishtan, which time frame candle suggests institutional buying and selling? No, it's it depends what you are doing. There is no institution thing. If you are doing swing trading, we use daily. Daily, it shows you the activity of the day. Okay? Either institution or mutual fund or big guys or hedge fund, whoever, all their actions is in the price of the day. So there is no candlestick that it is specific to some people. It's just what happened in the day. Okay? Trump said 3 white soldier pattern, good signal to know the reversal pattern. I don't know. I am not in the army. I have no idea about this war techniques. Which is very, very funny. What is this white soldier pattern? These are people who are creating war techniques. I have no idea about them, and I don't know. I don't want to know their techniques. I can use only one technique. I know if there is a reversal or no. One technique. I don't use soldier techniques or patterns or whatever. Okay? So this is the thing. How to know the trend is over? You know the trend is over when the stock doesn't go anymore. Okay? I will show you something. I will show you something to understand. The stock is going up. Here is it means February 16, 2017. XYZ is the stock. It was $20. It goes to $50 today, which is, let's say, 16, it means Friday, 2018. Then next week it be going down and it goes to $10 in 2019. This is a trend up, this is a trend down. How to know is going up or going down is training level 7. This is what I teach in training level 7, which is how to follow an uptrend. It teaches you how to stay in a long trends and how to exit very quickly downtrends. Because if you go up, you go down. This is investing. You don't exit. You just continue to hold 2017, 2019. Let's say 2020. It goes up here to $35. Okay. Let's say here is 2020. Now, stock going up and down, up and down. This is the investor who is using this. It means hold for many years. Holding for many years. Now, for us, we don't hold for many years. We hold when there is a trend. There is no trend, we exit. Is it clear? You say trading only IPO, is it the best strategy? It is more risky. The IPOs, it's more risky. If you get an IPO that it is good, believe me, you can make a lot of money. But if you are in a bad IPO, you will be losing a lot of money if you don't exit early. Trump, this is one idea. If you know how to trade, you can make money from anything you do. Penny stocks, big stocks, IPOs, ETF, whatever. But if you don't know how to trade, you will lose money in everything you do. So it doesn't mean if you want to specialize in IPOs, I showed in training level 2 or in my subscription how to trade IPOs and how to search for IPOs. Because IPOs, what does it mean? It means company that they go into the stock market, but it could be 1 year, 2 years, 3 years, 4 years. All these are called IPOs because they are new companies. If they succeed to stay 10 years, 20 years, 30 years, they become a good big companies that are stabilized. But some IPOs, they can't make it. They begin with $10, they go down, they go down, they go down until it becomes $1, and then they exit the stock market and they go to private company again because the stock market doesn't help them. So you see that? So it depends what you should do. Are professional traders only trade hot ones? No. For example, I trade whatever stock I find. What do you mean by hot? I don't understand what do you mean by hot. Do you mean that stock is going up is hot? Yes. Okay? So I don't understand what you call hot. Because for me, I don't follow the news. I don't follow what the people say. They say to you it is hot, it's up to you to trade what they ask you to do. But if you do what the people ask you to do, you will be losing money in the future. This is for sure. Because no one knows the future. Okay? If you look to Twitter IPO, it went down before going up to reach... Oh no! Twitter goes up first and go down. It's the opposite of Facebook. Facebook goes down and then goes... Just I will show you this to make sure you understand. So I will show you Twitter because I follow them. Okay? So this is Facebook. And this is Twitter. Okay? Now Facebook, let's say most of them they begin with the same price. I think it begins with 42. It goes to down to 70.55. And now it goes up 175. 2018, 2012. Now Twitter, okay, Twitter is the opposite. It has been going up from 42 to 74, and I was doing, and then it goes down to right now, let's say it's 33. But Twitter goes down. Oh, no, not 33. Okay. Now it is 33. But it goes to, let's say here, it goes to 13, I think 75. And it goes up now to 33. So this is the difference. Here down, up. Here up, down, up. So Facebook and Twitter are different in their way of progressing. Okay? So this is just an idea about how things work. Yes, it's 33, but understand that it was $13.75 or 73. So it was 13. Now it's 33. So it doubled. Okay, it more than doubled. It's like 120% from the low. It looked like the Twitter IPO, it went down before going up to no. As I told you, Trump, as I showed you, Twitter go up, then go down. Facebook go down, then go up. Trump said, do you think averaging down is bad or risky? It is risky. Okay, I will just give you an example. Averaging down is a problem. Now, let's say the stock here, XYZ or ZTD, it's just an example. It is 50. It goes to 40. Here you bought 2,000 shares. 2,000 shares. 30. 2,000 shares. Let's say now it's 20. You buy 2,000 shares. Okay? So 2,000 shares, let's say 2,000 shares, let's say it is 50K. You buy 50K, then you buy 50K, then you buy 50K, then you buy 50K. From where do you bring all this money? It means when from 50 to 40 you are a loser. Then you add more money to a loser, you become a loser. Then you add more money to a loser, you become a loser. And then you become the loser. So what is the conclusion? Is you are the biggest losers in the stock market. The biggest loser in the stock market. They should give you a reward of becoming the worst investor in the world. Okay? But for me, it's the opposite. Understand that. For me, if I want to buy, I will add. Let's say here, since you are we are speaking about investing. The stock is 20, it goes to 30, it goes to 40, it goes to 60. Okay? 2,000 shares, 2,000 shares, 2,000 shares, 2,000 shares. What does it mean? Here you are a winner. 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 So you are the best winner in stock market. Here you are making, let's say, you are making, let's say $5,000 profit. Then here you are 10,000 profit, 25,000 profit, 30K profit. I'm not speaking about your money. Let's say your money here, you put 40K and you are getting 30K or 40K. So you are the best winner in the stock market. You are making more and more and more money. Now for me, I do this. I do going long. I don't lose and then I add to a loser. Okay? So this is in general what I should do in investing. Wiseman said, maybe what Trump means is red stock, not blue stock, like Walmart. Yeah, but in general, why you invest in a loser for many years and you add more money? Why is that? Why you don't take your money to another stock that it is going up? Why? Why you want to be a loser while the other people want to be a winner? It means it is your decision. And then after that, the market can go, the stock or the company can go bankrupt. And you lose all the money that you put. Because understand, when the stock is losing money, the mutual fund, they are the first to know what's going on to the market. Because they have detective. They have financial detective to see what's the company is doing. Is it making money? Yes or no? It's not like you can't know what the market is doing. You can't. Until one day, they told you in the news that your company is bankrupt. You go to your broker, you find it's empty. It happened to me with a student. I will tell you what did happen here. What did happen here? There is one guy. I taught him before. He put 250K in Google, and he put 50K into another stock, XYZ, just another stock. Now, he bought the stock at $500. It goes to 1,000. So he doubled his money. He has now 5K. Now here, 200K, this stock go bankrupt and he doesn't know. He go bankrupt, all this, it becomes zero. So 100% loss in this investment, and here 100% profit. So after 5 years or 6 years, he has the same money. Although he has lost all these, although he has the same money, but he lost 5 years from his life. 5 years investing, and it is the same. It is the same money. If he put this money, all his money, into a 5% or 4% interest rate, he could have made money. Okay? So you see the difference? So you see the difference always. About when you say wise men, red stock and blue stock, this is just a name. There are some stocks that had been so bad, and they lost a lot of money. I don't know if I can find. Okay, let's show you the chart. This is the Dow Jones. Let's show you a stock. Yes, see this stock. Wise men, you said that it is a red stock, not a blue stock. This is a blue stock. It's General Electrics. It was 32, now it's 15. So it lost 50% of its money. Are you going to put money in GE where it's going down? Or are you going to put it here? Okay? So you see the difference? Boeing Co. was 127. Now it's 350. If you have been putting money here, is it better here, or is it in the GE that you saw before? Okay, is it putting money averaging down here, which is better, or the other stock? Okay, some stocks have trouble, so don't make yourself trouble also. Boeing is a monopoly. No, it's not because of monopoly. It's because people, they like it and they buy it. That's why it goes up. It's not because of monopoly or no monopoly. All the other aircraft, they are making money. Okay, they are making money and they exist. It's not only this Boeing. Let's see a Boeing, aerospace defense. Let's go to this one. I will show you right now. Check with me the chart. Now here we are in the aerospace and defense sector. Lockheed Martin is $360 a share, and it is a big company like Boeing. Knock also $356. Okay, Boeing. TDG, it's less. It's not that big. Okay, RTN. So you see a lot of stocks in the sector, they are excellent. They are doing good. Not just Boeing. SPR, it was 43, now it's 92. So there are a lot of companies. 42, it's 80. So there are a lot of stocks that have been. Yes. Wiseman, I understand that you are just commenting on him, but when you said red stock and blue stock, I showed you that a blue stock can be a red stock also. So it doesn't mean that blue chips are always good. Some are good, some are bad. And I showed you that some stocks, they have done nothing for 2 years, they have the same price. They go up, they go down, they go up, they go down, but you can make no money from them. But some other stocks, they are doing excellent. This is just what I want to tell you. You tell your students not to average down, so I do what you say. Yes, well, no problem. Because for me, my aim is that I give you the general thing not to do, because sometimes when you lose, you will be losing all your money. And this, if you are putting more money to a loser, from where do you bring this money? Why you don't have many positions? Some they are good, some they are bad. And you exit the bad ones and you leave just the good ones. This is a good strategy. Then you take all your savings and you put them into a loser. You become the biggest loser in the market, instead of becoming the best winner in the market. So, as I told you before, we are waiting for the market for next week and the other week. if the market, I just give you this idea, and then the first time I'm meeting the live discussion feels great. Thank you very much, Giyoshi. For you guys, we always do the same. Thanks you, Giyoshi. You can come each time on Saturdays. This is my website and my my email. If you want to send me an email or something, this is my website if you want to check. And the thing is, I do always on Saturdays 11 p.m. Eastern Time. Okay, just to get the idea. So if you want to come, please come on this time. Saturdays 11 p.m. Eastern Time. We always have 1 hour or 2 or 3 depending on the discussion, and we speak about the market, we speak about the stocks, we speak about the trends, we speak about a lot of things that happen in the market, what is good, what is bad, and this will help you get the general ideas about my strategies. Yes, next meeting is the same. It's Saturdays 11 p.m. Eastern Times. It's always the same. Jason said, I have a feeling that the correction is not over yet. Yes, it is not. That's why I will show you the last thing before we stop. So please check the chart. So we go to the Dow Jones. Okay, let's go to the Dow Jones. If the market continues and hit the resistance line here and continues to go up, we say that the correction is over. But if it goes down and hits this and goes down, we will have the correction back. But for me, I have no feeling, I have no prediction. On Monday, we try to see what's going on. Monday, Tuesday, Wednesday, if God wills, we try to see what's going on. Is it going up or going down? But I have no feeling about the market when I see something and then I react. Okay? This is what I always do to see the whole market. Yes, I have mailed you before. I am still racking up money to pull on your training, sir. You are a great teacher. You make everything simple. Bravo, sir. Thank you very much, Okpara. Thank you. Whenever you have an idea or something good or something bad, or you have some ideas, or you see something that you can't understand, please, all of you guys, send me an email and I will try to explain into details your private thing. Okay? So at the end of this session, thank you very much. We will try to be looking for next week what will be going on. Oh, no. Furba 666. Are you still shorting the Dow? No. I have covered my back a long time ago. I don't wait until now because I see that there is a reverse, and I have explained in the last week when the first reverse happened, I exit my shorts. I am long right now. I am not short. I have a lot of stocks that are long. I don't have short Dow Jones no more because the Dow Jones have been so strong, and I have made videos daily about Dow Jones last week and the other week. Each day I make video and explain what is going on. And I say the market is strong. So if the market is strong, I can't stay with shorts because I will be losing money. Okay? So thank you very much, all of you guys. Please, if you have any questions, you have my email that I have already given to you, and my website if you want to check if something you need. Okay, so here is my website and my email. Please take notes of it, and next week we try to see another subject. If the market is going up and it's good and it continues, we will make some information about that. Thank you very much, and see you next week.